You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
Thank you for tuning in to Mining Stock Education. I'm Bill Powers, your host, and we are following up with Aurcana Silver and its president and CEO and director, Kevin Drover, a frequent guest of the show. And after our last interview a couple weeks ago, many of you had questions about the financing that Aurcana announced after that interview. And so Kevin joins us again today to talk about the financing which they just closed, which was clearly oversubscribed. So Kevin, welcome back onto the show. And could you explain from the company's position, what was the purpose of this raise? Why did you do it? And I also had some investors write in and they questioned the warrant. Why did you issue the warrant with this raise also?
Well, thanks for the questions, Bill, and good to be back on the show again. As a matter of fact, much appreciated. Well, we looked at the situation that we're in today's environment, in the COVID environment, and we were well funded with the cash that we had on hand and the $28 million debt facility that we put in place. But it doesn't give us a lot of leeway in terms of things that might go bump in the night kind of thing. With COVID, there's a significant amount of uncertainty that's been injected into the world at this stage of the game. And we certainly, not just myself, but in consultation with our board of directors, we decided that we needed to cash up a little bit more than what we had for the eventualities. In addition to that, we believe that we're in a good silver bull market, that there's going to be going forward. We'll be in an opportunistic environment kind of thing. There's a number of opportunities that we want to take advantage of, that being consolidation in the district. And we've talked about that on many of our presentations, in prior meetings that we've had on one-to-one conferences and even on this particular show that you have here. So there's a number of different things that we want to do there. In addition to that, we have the Shafter project in Texas that we would like to advance, given the current environment and whatnot. So we felt that it was a prudent thing for us to do at this stage of the game, to add some dollars to our coffers to ensure that we had sufficient funds in case something that prevented us from meeting schedule on getting the Revenue-Virginius mine in production. Every month that we would lose on schedule is about $2.3 million. In addition to that, we've included in our model and our calculations that there's revenue that will come to us as we ramp up. If that ramp up is delayed, there's more dollars that are put off to later. There's with the $28 million facility that we've got, there's interest payments that we need to make between now and then, and they're about $1 million every 3 months. If we, for instance, get pushed out till September or October for summer, I'm not saying that we are going to do that, but if that should happen, then we bump up against principal payments that are required as part of the debt facility. So what we don't want to be doing is put ourselves in a position where, and you've seen it many times before, and we all have, where companies get near the finish line, all of a sudden run out of money, and then have to go back to the market or go back to some debt provider, and that's your gotcha moment. Whatever dollars you're going to try and get at that point are going to be very expensive dollars. We don't want to put ourselves in that position. So we thought it prudent to get some money additionally to ensure that we won't going to put ourselves in those positions. And of course, we do want to do some exploration. We've got great exploration opportunity at the Revenue-Virginius mine. We've been beaten up in the market, over the last few years because of our short life of mine of 6.5, 7 years kind of thing. We have tremendous targets at Revenue-Virginius, and we need to start looking at those sooner rather than later. and that along with the mine that we have in Texas. So those are some of the things that we're thinking that the use of proceeds would be very prudent to apply them to those types of things. But certainly the biggest and the driving force is going to be we don't want to get ourselves caught in a position where COVID hits us. We had one bout of COVID already, cost us about 6 weeks of schedule. About 29, I believe, of our people came down with COVID, and we had to virtually stop. That was in October, November. And we don't want to have that happen again. And we've taken huge precautions, and that costs us extra money as well. So, I think we're being very prudent. As for the pricing of the offering itself, we looked at a couple of different things and looked at it a couple of different ways. We looked at the volume weighted average price for the 30-day period immediately preceding when we announced, and our average price was $1.03. We priced it at $1. We looked at, but that pricing included the run up to that $1.20, $1.21. So we had huge volume, and it was skewed that way to the higher price. We looked at just December without that big run up, and our price was 96 cents. So we thought that $1 was a very reasonable expectation that we could do the equity issue at. We looked at the warrant, and this is 4-month-old paper. So it's not something that you can just trade tomorrow after you do it. And we thought that a full warrant, given the fact that on a fully diluted basis, we were going to be probably less than 10% dilution. Talk to our major shareholder, who's on our board, of course, and and myself. I'm a fairly significant shareholder in the company as well, and I thought that it was a very prudent move, given some of the uncertainty. And along with some of the things that we wanted to try and accomplish in the next medium term, if you would. So we thought that the full warrant and the dollar pricing was a good place to be. We thought that the product would sell for that. And lo and behold, we found that there's tremendous demand for the offering. As a matter of fact, we are so oversubscribed. It's just unbelievable. We just closed the offering, and we'll close on approximately 32 million Canadian dollars, right around $25 million US, which gives us a considerable cushion on a go-forward basis. So, but even more importantly than that, we turned down $15 to $20 million Canadian. That we weren't prepared to accept, and we just don't need the money at this stage of the game. So the call for our stock has been tremendous, and people obviously recognize that this is a very good go forward opportunity for investment.
Kevin, can you share with us something about the shareholders that came in through this financing? Are there any names or at least generalities that you could share with who entered into the stock?
I at this stage of the game, I probably don't want to share the names themselves without consulting with the individuals. But we have some very large funds that have come into us, out of Europe, and have taken substantial amounts of the equity offering that we've made. So those are good things. There's also been a lot of retail investors that have come in, just wanted to get in. They obviously like the story and are, looking to make some money. And we all are, of course, on a go-forward basis. I think that right now, people are looking at us to say, well, there's this dilution, it's hard on the retail groups. I'm an investor. I hold a substantial position in the company as well. I think this is the right thing to do at this point in time.
And does this, if I understood you, this will speed up Shafter's development in Texas, you said as well?
Well, I wouldn't say that it will speed it up. What it will do is allow us to evaluate Shafter, sooner than what we had originally anticipated. That the technical work that we need to do, we'll be able to get that going sooner.
Okay. And is there anything more you want to update the market on at this point, or it's just all steam ahead and hopefully we don't get hit with COVID or excessive snow, right? Those are the two main things that would hinder you, like we talked last time.
Yeah. Well, I just to let everybody know that the work at the site is going very well. We've been able to attract some excellent people. Our miners, of course, are a key component of this. We've been able to get them on site. As in any startup process, there's always some teething pains. We've put, I believe, most of those behind us. Right now, we're still targeting July as our startup date. We're hoping we could do it sooner than that, but we're working very hard toward getting that date. We're taking all the precautions we can in terms of trying to avoid any impacts of COVID. So generally speaking, I think we're on track, as we've said before. Everybody is definitely working hard to get us where we need to be. Let's hope COVID doesn't come into this. And the things we can control, we're trying to control them. Snow, weather, COVID, those kinds of things we have no control over, but we can take at least the best precautions that we possibly can.
Okay, the website is Aurcana.com. I'll put a link to that in the show notes. You can buy the stock or research the chart. In Toronto, under the ticker AUN. In the States, it's on the OTC under the ticker AUNFF. And if you go to the website, Aurcana's website or my website, there's plenty of past interviews that you can listen to that explains the project as well. Kevin, thanks for coming on the show and providing an update.
Thanks, Bill. Anytime. Appreciate it. Thank you.